This week's Table of Knowledge, we're talking about
benchmarks, small business benchmarks.
Okay, and not just any benchmarks. We're talking about the ones that the ATO publish each year. They update the benchmarks, and we just thought it'd be an interesting topic for those of you who do it not even know what they are potentially.
That's right. So what even is a benchmark? So a benchmark is a performance indicator that the ATO release that essentially allows you to compare your business to other businesses in the same industry, and you can see how your business is going really and whether you need to make any changes. Of course, the ATO also uses that data on their side to make sure, of course, it raises some red flags if it's totally outside of that benchmark.
Yeah, that's correct. So they wouldn't be doing this just for the fun of it. There's definitely reasons that they do it, and the benchmarking, we'll talk about what they might use it for in a minute. But they have 1.9 million different small business tax returns that they use each year to create these benchmarks. And they have more than 100, in fact, it's 101 specific industry benchmarks that they publish each year based on the prior year knowledge that they've got from tax returns.
Yeah, so we have spoken about it a few times on the show, but we'll definitely have a link in the show notes if you want to go through and have a look at your industry and compare the benchmarks. But Jo, should we talk about how the ATO actually gets these benchmark figures?
Yeah, sure. So, well, most of the information does come from the tax return, and they have a pretty specific formula around how they calculate it, and they also get that verified by an actuary, an independent source, to make sure that the information is correct. If you do want to, I don't know, did you want to go into that in more detail? Because I don't know all the details of how they calculate it.
No, that's okay.
But they do tell you on the tax office website.
Yeah, they do. So there is a very simple formula that they have on the tax office website.
Let's go for it. You go for it, Jade.
So the basic formula for them to calculate the benchmark is the amount at the relevant labels on your tax return. So they have a list of labels depending on whether you're operating as a company, trust, partnership or sole trader, whatever it might be, and they do list what those labels are. They divide those by your turnover for the year and times that by 100, which gives you a percentage of your benchmark ratio. So you can then get that figure and compare it to other industries.
Okay, and some of the things that they do publish, the benchmarks is the cost of sales excluding labour compared to turnover. Hopefully I didn't tongue-tie that tonight. The rent compared to turnover, the cost of labour compared to turnover, and the cost of motor vehicles compared to turnover, as well as all of your total expenses compared to turnover.
Yeah, that's right. So they do look at a few things to get those figures.
And so if you're outside of those figures, so first of all, I really recommend most businesses to actually have a look at this. And there is a little tool on the ATO website where you can go in and put your figures in and see where you sit in line with other benchmarks or with other people in your industry. It's a really good understanding of how you're running your business correctly, I think.
Yeah, exactly right. So, for example, if you are reporting above the benchmark, it means that your expenses are high in relation to your sales. So it's important to know, because that way you can go through and have a look and work out, why are my expenses so much higher and what can I do to reduce those, or how can I increase my sales as well to get that balance.
And what the ATO are probably looking for is, are you actually leaving something out? So if your expenses seem really high compared to your sales, maybe your sales are actually too low, and that's because you're not telling them everything, and or that you're inflating your expenses because they're things that are private in nature. So they're looking at it from one angle, but of course, as business owners, we should be looking at it just to see where we even sit compared to everyone else. It's a really good set of data that we can use.
Yeah, absolutely. So it is really good to know that information. You can also see how those businesses in your industry is going and make those changes.
Now, what the ATO do look at is they would obviously run a set of data over using benchmarks to see what you're looking like, and how do they know what industry you're in? So do you know what the tools are or what things they look at?
Yes, so they do have a look at what's entered into the tax return. So when we complete a tax return, we need to put in there what industry that business is in. So, for example, when Jigsaw completes their tax return, we put in that it's an accounting firm, whether you may be a construction company or whatever you might be. We put that into the tax return, and that flows through that to the ATO to look at for these benchmarking purposes also.
Yeah, so that's done. It's called an ANZIC code, ANZIC, which is, just the term that we use. And there's a whole bunch of ANZIC codes. But also in tax returns, we can actually not only just put that in, but actually say what kind of business it is. So often we find that it's hard to just be specific about, we're an accounting firm. Okay, that's what we are. But there are a lot of businesses out there where you go, I can't actually find the right ANZIC term for it or code for it, but I can find something that's close to it, and then I can put a description of what the business is. So they will look at that. And the other thing that they will also look at is your trading name. And I do recall in the past having conversations with the ATO very much based on that, where we had a company who did have a trading name, which then changed their direction and were doing something completely different, but they didn't change their trading name. And the ATO came back to us and said, those figures are way outside of the benchmark for that industry, and that's because they weren't in that industry anymore. So they do look at the trading name as well. Yeah,
so it's really important to keep that information up to date, because quite often as well, especially maybe with sole traders that have a little bit of a side hustle or something going on, you may totally change business directions, and it's important to keep that information up to date.
And as tax agents, we should be aware, and sometimes we probably don't always look into that because that information just pushes through from the year before, and often we just go, that looks like it's the right ANZIC code, but is it really the right one? Maybe they have changed. And we also need to, I think, update that on the business register as well, because that information is there too. So there's all sorts of places where they do grab that information from. Now, if they do think you're outside of the benchmark, it doesn't automatically mean you're going to be audited, but it could mean that they will put some attention to you. And some of the things that they might do in that circumstance is actually look to see why, first of all, they're going to ask some questions. And if the answer is that you really don't know, then they might actually look a little bit further. So I don't know if you've had any experience with this.
I haven't, no.
I have. And one of the things that they will do is, if they really don't believe that you have adequate records to explain what the situation is and why it's that way, they can actually just assess that you've provided the wrong information, and they can just amend your assessment based on that. And I haven't seen them do it, but I have seen them try to do it with one of my clients in the past, and it was because the code that they had and the business type they had wasn't actually the same thing. The benchmarks they were applying were not the correct benchmarks, and based on what we were saying, the ATO thought that there was probably another $600,000 worth of revenue that or income that the client hadn't declared, which actually wasn't the case. So we managed to get out of it, but that could have resulted in a fairly significant tax bill for that client.
Absolutely, yeah. So I do know that you can kind of push back on them and explain why your business might be outside of that benchmark, but it's definitely something the ATO will look into.
And one of the things they do also use it for is for people who actually haven't ever really bothered to keep records, and I do know that happens. So we do sometimes see people who have just started a business, not kept records, they've really got nothing to go off. And so how does the ATO assess what their profitability is, what they've done? And so they've got a couple of other tools that they can use. So not only will they use benchmarks, they can also use what's called a business viability assessment, where they actually, have another tool that they can use. And the other one they can use is a personal living expense worksheet. So if they want to see how much you must have made to be around.
Affording that lifestyle.
Yeah, to afford your lifestyle. They can use that as well. And all of those combined will help them to form an opinion on how much tax you really should be paying. Now, if you're a good taxpayer and you've got your records up to date, you probably shouldn't really worry about this, because hopefully this will never be an issue for you. But for those people who are just way behind and totally have no idea how much tax they should be paying, this is what the tax office would potentially use.
Yeah, they have so many tools out there really, And especially when they've got that living expense tool to look at your lifestyle and say, well, you must have been earning at least this. It's really, it's really interesting to know that they can go to those lengths.
Yeah, and obviously that's something they would use for the cash economy, people who are operating in the cash economy. And we have heard stories of, well, you've declared this much income for this many years, which indicates you've earned nothing, and yet you've got this big house and you've got a mortgage that's this much money, and you're driving a really flash car, and you've got 5 kids and they all go to private schools, like all that sort of stuff. Like, I mean, they can definitely go back and say there's no way that what you're telling us is correct. And then once they've made that assessment, it would be up to you as the taxpayer to prove otherwise how that was the case. So.
God, definitely a situation I would not want to find myself in.
Yeah.
Not that I'm doing anything wrong, of course, but...
Of course not. But yeah, I mean, that's exactly right. Like, where do you go from there and how do you prove it? So essentially what I would suggest everyone to do is actually to go onto the website and have a look at the benchmarks. Now, they're not there for every industry. They're mainly there for industries that have, do have cost of sales and things like that. So obviously service industries, it's probably a little bit more difficult because we don't have products in there, and how do we measure that? But there are definitely lots of industry codes in there. So go on and have a look at your industry, see what the benchmark's like, maybe have a go at using the tool and have a think about where you sit in there, and you might want to get some information or advice from your accountant on how you can perhaps better fit into the benchmarks or be better than the benchmarks, as in not higher, but actually have a better performance than what the industry standard is.
Exactly. So it is really nice to know how you are performing. I do think it's good, and you might surprise yourself. You might actually be performing really well, and you can give yourself a pat on the back. Yes. Really.
Exactly. So anyway, that's our little tutorial on benchmarks, and we'll be back next week with something that starts with C.
Yes, we'll have a think about that.